You're still tuned into Trading Hour on CNBC-TV18, and now S&P has cut India's FY23 GDP growth forecast by 30 bips. This is to 7%, and for FY24 it has been cut by 50 bips to 6%. In its latest report, it says that the global slowdown will hit the Asia-Pacific region, but it will not halt it. To discuss more on this, we're now joined by Vishrut Rana of S&P Global Ratings. Vishrut, good morning and thanks a lot for joining us. This is Pavitra. So, coming to just the India part of this report first, you have said that, you are trimming the kind of forecast that you have, but it's not likely to halt growth in the region. What are the parts that you see will, really hold up growth, or what do you see as the sectors that will sort of keep this market afloat?
Yeah, thanks, Pavitra. It's a pleasure to be on the program. And as you mentioned, we're lowering our Asia-Pacific forecast for 2023. This is on a weaker global outlook that we're seeing at the moment. We're expecting this synchronized monetary policy tightening that's going on globally to weigh on growth prospects over 2023 in the US and Europe. We have lower growth forecasts. In Asia-Pacific, there will be this knock-on effect from this weaker external demand. However, we anticipate that the domestic demand, this consumers going out there and spending, that's going to be the strong point for Asia Pacific, for India as well, and really this is the area that's going to support growth over the next couple of years in the region.
Okay, so India's domestic demand resilience will support growth for the entire Asia-Pacific region. But that said, Vishrut, you've still brought down India's GDP forecast for this year as well as the next fiscal year. Could you tell us the reason why?
Yeah, so there's a couple of factors driving our forecast revision for India for this fiscal year. There's two main reasons. So the first reason is that the April-June quarter saw weak sequential activity, weaker than anticipated, even though there was this strong private consumer activity that I spoke about. But the overall GDP number is slightly lower than our expectations. As a result, there's that base effect pulling down the overall year's number. The second reason, which is also the main driver for fiscal 24's downward revision, is this global slowdown that we are seeing. So we're starting to see that in the numbers as well. Exports activity, trade activity in general is starting to slow down. Industrial production numbers also looking a little bit weaker. And this is, of course, not just an India narrative. This is a region-wide narrative that we're seeing. And as a result, we expect that this external orientation will lead to this slower growth numbers out of India. One interesting point on that is that in recent years, the Indian GDP cycle has been very strongly correlated with the global growth cycle. So, an indication of more integration of India's economy with the rest of the world.
Well, we don't know whether that works well for us or not, because at some times not being integrated with the global economy works to our benefit because of the strong domestic demand that we have, and at sometimes it doesn't. Anyway, Vishrut, your thoughts on the way central banks will then behave in light of the kind of growth targets that you've had for Asia Pacific. I mean, we're all looking at the big numbers coming in from the US, but your thoughts in local central banks and the US Fed itself?
Yeah, no, that is the key question for us at the moment in terms of how central banks are going to respond to this ongoing, this inflationary episode that we are seeing. And there's a number of elements. So let me break down inflation into the two key elements I believe we should be watching out for. So one, on the supply side. So what we saw earlier on this year is oil prices rising quite significantly, and that led to not just energy prices rising, but a wide range of commodities. So there was that supply side push on inflation. Some of that has eased in recent months as oil kind of remains range bound in the $90 to $100 barrel range. So some of that energy price inflation is starting to moderate in year-on-year terms. And then the second part of it is the demand side. So core inflation has been ticking higher, and that's also happening here in India as growth recovers. And the central bank is trying to push back against that, certainly in the US with the Fed. So for the Fed, it's going to be a question of when that cycle turns, when we start to see a slowdown in domestic demand and inflation expectations start to come down. We don't anticipate that will happen until at least mid-2023. So we do anticipate that the Fed will be tightening till then. In India, we expect that the RBI is likely to tighten further. However, the pace of increases are going to be a little bit more gradual as the RBI waits to see whether, what's the effect of the current monetary policy tightening that's already happened. About 200 basis points already this year, so pretty significant. It is going to weigh down on inflation, and as I said, supply side is going to bring down the number a little bit as well.
So how much more by way of rate hikes from the RBI? 190 basis points done so far in this year. What's your expectation?
So, Rima, for the end of the year, we have 6.25% as our projections. We anticipate a material slowdown in the pace of tightening, which works out to another 35 basis points from here. And then after that, we expect that core price pressures are going to start to stabilize. And on the headline side, particularly if next year's monsoon continue to be favorable, we expect food price inflation to moderate. And that will give the RBI some space to to ease policy, so cut interest rates over the course of the 12 months beginning March 2023.
So in the December policy, a 35 basis points rate hike?
Yeah, that's what we are penciled in at the moment.
All right. And then after, in FY24, we will start seeing a rate cutting cycle from the RBI.
Yes, so we expect that we are going to see some easing from there. So, that should hopefully be favorable for financial conditions. On the other hand, the risk to that is, of course, this core inflation story. So if we don't see core inflation start to ease, then the RBI might be pressured to continue tightening policy even from there.
All right, very quickly, what is your outlook on just the core inflation, and how do you see it coming down?
Yeah, so really one of the elements that has been playing into the core inflation story, not just in India but globally, is the wages and labor market. So the rebound in services that we saw post-pandemic has been one of the key drivers of core inflationary pressures and service market labor pressures. So when we start to see that slowdown in the global economy happen, that's when I start to expect core inflation pressures to ease. So by that metric, probably another 6 months, late H1 2023.
All right, take that point, Vishrut. Thank you so much for joining in and giving us that outlook. As we speak, there is news at the bottom of your screen where US-based crypto exchange Bitfront will cease operations by the end of this year, and this follows a lot of the other crypto-based companies, etc., crypto-based exchanges which have gone into financial difficulties. We take a short break, come back, get you more on the markets on the other side.